No. Go ahead.
Welcome everyone to Synergy Traders Advanced Option Strategies. My name is Anka Metcalf and I am the host today. And with me today, I have AJ Brown, I have Samantha LaDuke, and I have Jim Kenny. And we are going to be discussing some option strategies, but not only, we're going to talk about the market. I see a lot of questions already in this room about stocks. And
Archana's here too.
Okay, sorry about that, David.
Archana, how do you pronounce your last name? Just want to acknowledge that you were here.
Yeah, I'm here. Jaktiani.
Okay.
That was too fast, Archana.
That's okay. Jaktiani, probably it's not possible, so it's fine.
Okay. Okay. I just wanted to acknowledge that you were with us as well.
Okay. Okay, is it Archana?
Archana.
Archana. Archana. What a wonderful name. I love it.
It means offering, actually.
Really?
Offering to God, yes.
Awesome. So glad to have you here with us today. And all right, so I guess we can get started. Before we actually dive into technical discussions, let's take 5 seconds for a brief intro and let everybody know a little bit about yourself. Those that have joined a little bit later within this webinar, just let them, we're going to do a really quick intro. So AJ, I'm going to start with you. Just a few words about yourself and what you do.
Hey there, AJ Brown here with Trading Trainer. We've been in business since 2003, teaching folks how to do different types of option trading, mainly against equities, ETFs, and indexes. And yeah, my favorite color is purple.
AJ, we share the same favorite. We have the same favorite color.
Nice.
All right, thank you so much, AJ. And Archana, tell us a little bit about yourself, and then Samantha as well.
Hi, I used to trade by myself, and then once on Twitter, Samantha asked, she requires somebody to help, and she's looking for a moderator, and I just talked to her and she liked my analysis and everything. And so then for last year, I've been moderating in her trading room. And now I teach between the lunch hour to do trade management. And so once she does all her analysis, the trades, how do you manage? Where do you stop if you have to defend? So those kind of things I answer in the afternoon session in her trading room.
Awesome. Thank you so much, Arjuna, for sharing your info with us, and welcome to the group. Samantha, a little bit about yourself and what you do.
Greetings again. Yes, run LaDukeTrading.com, and I am obviously focused in trader education, specifically macro to micro analysis, education, and trading. So we actively trade and share those trade setups with clients, not only from a live trading room, but also live brokerage triggered trade alerts. And that includes both the research component, the education component, which Archana supports in my live trading room as a trading room moderator, not only for my trades, setting up advanced option tactics, but also her own book and helping clients better position their trading ideas using options.
Awesome, Samantha. Thank you. And Jim, a little bit about yourself.
Yeah, I've been in the options business for a very long time, and I've done seminars throughout the nation, both live and on the Zoom and stuff like that. And, basically each week I come out with a weekly update, and I issue it out for free. And so give a little roundup on stocks and bonds and everything else. And if people have any questions on any specific market or any specific stock, they can always shoot an email, and we try to do an analysis for them.
1-800-OPTIONS-PROFESSOR, right?
Well, it's optionprofessor@gmail.com.
I know, but it was just funny.
Nobody uses the phone anymore.
I know. All right. So Okay, so my name is Anka Metcalf. For those of you that don't know me, I did not have a presentation today, and that is because guess what? I do not trade options. So I guess I'm the perfect moderator here to pick your brains for the strategies and everything that is option related. I only trade equities and futures. I day trade futures only in the first 2 hours in the morning, and I swing trade equities. I have been doing it for over 17 years. And prior to becoming a professional independent trader, I come with 10 plus years in investment banking. I'm the founder and CEO of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade and swing trade the futures and the equities market. And I'm the designer of an institutional proprietary trading system that is based on 8 layers of price support resistance, specific trigger times throughout the New York trading session, also specific price zones that are technical on chart as well, price synchronicity and divergency, and a strict set of trading rules and a scoring system that enables myself and my traders to identify trades with ease. All right, so now that we are we pretty much have the intro, and our audience know what we're trading and what we do for a living. Let's get a little bit into what is your favorite asset class to trade and why? Is it stocks? Is it futures? Is it cryptocurrency? So AJ, you're gonna go first.
Sure. I trade all sorts of stocks, indexes, ETFs, and specifically the options that are written against them.
Okay, awesome. Archana?
Yeah, hi.
Okay, so what is your preferred asset class? Do you trade futures? Do you trade stocks, cryptocurrencies? What is your favorite asset? What do you focus on?
Stocks. I trade options in stocks and just look at volatility and decide whether I should just go directional or sell some premium.
Okay, awesome. Samantha?
It's definitely volatility. So I'm looking for a directional move. So I do market timing calls. I want to position for volatility. I want to move with it. I'm not afraid of it. Most people are positioning their accounts to avoid volatility. I embrace it. So I'm directional, options on equities, and a little bit of advanced option tactics when it's a trend trade. I don't have to manage it so closely.
Samantha, I love that about you. I am going into volatility as well. All right. How about you, Jim? What is your favorite? Because I know you trade everything, but from bonds.
I would, if somebody said, what's my favorite thing to do with options? It's obviously to try to take advantage of probabilities. So, if I had to do something with a rising market, I might be more interested in writing puts and buying calls with the premium. Or, just try to get something where the numerical probabilities will favor me pretty well. And sometimes a right buy strategy or, something along those lines is the most interesting to me.
Awesome, Jim. All right. Now here's a question, very simple question that a lot of the traders find very intriguing and at the same time very interesting because they try to incorporate it in their trading style. What indicator do you find useful and you use it the most, and why? Or if you have a set of indicators that you use mostly, what is that specific set of indicators? AJ, you have the mic.
Yeah, well, I like to combine leading indicators followed by lagging indicators. I never take action on a leading indicator, but a leading indicator picks me, triggers me to start looking for lagging indicators for confirmation and building confidence in whatever signal I'm looking for. So if you'd ask me what my favorite indicator is, I'd have to say some moving average crossings. I love all the MACD variations especially.
Okay, awesome. So do you have any specific moving averages that you're using that you can mention, or
Sure.
is it? Okay.
I really enjoy, along with some price threshold crossings, the 3 and the 5 day EMA.
Interesting. So I would say that is that is on the aggressive side.
That is on the aggressive
Awesome.
side. That's what I like to do to identify tops and bottoms when I'm legging into positions in my range bound option trading strategies.
All right. There's also a question in the room. What is a leading indicator?
Leading indicator is one like an overbought, oversold oscillator type, like a Williams percent R that tells you that, hey, the markets are oversold, or hey, the markets are overbought. Just because they're overbought doesn't mean it's time to sell, in my humble opinion. I've seen markets stay overbought for months, if not even a half a year or so. So that's not really a thing. But when they do become overbought, that's when I start looking for lagging indicators like EMA crossings to tell me that not only am I overbought, but now I'm starting to form a reversal down.
Totally. I totally agree. I also use the William percent R, and I agree. Markets can stay in overbought and oversold conditions for a very long time. And we have to have, whether you're watching price action or in your case, you're watching the crosses off of those EMAs, that gives you an extra layer of confidence when you're reading the chart before you take some action. So that's awesome, AJ. Archana, what is your favorite indicator?
I like to trade squeezes, Bollinger Band squeezes, because they can give a bigger move in either direction. So yeah, that is what and if it's squeezings, of course, I cannot sell premium. And if it's too wide, I can, have an iron condor above the band.
Nice.
Awesome. Thank you for your input. Samantha, what is your favorite indicator and why?
That depends on my picture, if it's big picture or macro or micro. So for the macro stuff, I'm using intermarket analysis, which I pull back in time and I'm looking at relations and most importantly, relative strength. So this to me helps me spot a lot of things before they happen. It's basically pattern recognition, if you will, but intermarket analysis and relative strength. Then when I get into an actual chart of the underlying, I'm looking at patterns. I'm definitely looking for where, like with Archana squeezes, also depending on the time frame, the moving averages. On a weekly, I love the 10 and 21 week crossover. On a daily, it's a little bit different. On an hourly, it's a little bit different. But the point is I'm looking for a pattern. And then the only kind of off-the-shelf indicator that I look at, because there are lots, I've designed some, I have found, I've tried everything. I basically have a stochastics indicator up there. I tweak it a little bit based on my own feel, but I definitely like using the stochastic on each time frame because I have charts up hour, day, and week side by side. I'm looking for a congruence, if you will.
Right.
So that child, parent, grandparent relationship from small duration to larger, I use stochastics across, and I think that that's very helpful for me as well.
I agree. All right, Jim, what is your favorite indicator?
I'd like to use a combination of the shorter term moving averages with the longer ones. So you got maybe a 10, 20 day for the shorter term ones, and then you go your 1 year, 2 year, 3 year. And it's helpful because like on the big rebound rally we just saw with the transports and the Russell, you would get very excited on the short-term averages, but if you notice the longer-term averages were right above us and pointing down. So when it ran into those averages, the longer-term averages gave me the idea that you want to get out, whereas the shorter-term average would not have told me that. And so I think the combination of looking at the lens from a shorter term basis, but also making sure you know what the long-term averages are as well. And then on the VIX, after doing this for decades, I don't really need a weatherman to tell me which way the wind blows, so I can look at an option and almost get a feeling of, is this thing too fat? Is this fairly priced? Is this cheap? And so basically doing some kind of I guess you would call it a subjective analysis on whether the option is overpriced, fairly priced, or underpriced.
Totally. All right. So even though I do not trade options, so I trade common and also trade futures, I treat them the same way. My style of trading is from long term. So I do have some active investing stocks. I do swing trade, active swing trade, and I also day trade. And because of that, I use all the time frames. That means that my executional time frames are very small time frames, 1 to 5, 15. and they're also they are only related to day trading. Like I said, their executional time frames are I get all my buys from higher time frames, 1 hour, 4 hour, daily charts, weekly charts, monthly charts, and of course quarterly charts. When I start my analysis, I do top down always to get my confluence areas, and if I have multiple layers of support that are present on multiple time frames, that becomes a cluster zone. So from that point on, that becomes a decision zone, whether to buy, aggressive buy, wait for a confirmation, or short into that particular area. I don't use many indicators. I'm with AJ, so I use the William percent R, and I do love to see when the market is overbought and oversold. And in fact, the William percent R helped with the decision on March 26th off of that low. In fact, we took in the trading room the next 4 hour buy that was setting up in the New York trading session. And from that point on, we rode the market higher, including today. We actually were long into the trading room in the futures indices. Sideways price action, obviously a little bit of profit, one stop. But going back to the indicators, like I said, the William percent R gives me that special edge. But just like AJ, I like to look for momentum. And just like Samantha mentioned, I look for momentum. And I also use a couple of moving averages on all my time frames. And the moving averages are, I use the 10 exponential moving average, and that is the only exponential moving average that I use. And I use 3 more simple moving averages, which are the 20 simple moving average, 20 or 21, same thing, tomato, tomato. And then we have the 50 simple moving average and the 200 simple moving average, and volume, obviously, because I want to know when we're getting that influx, that volume. And especially it's very important in day trading, because as we're going into the second half of the session, especially during doldrums, and as we're approaching, if we don't see any momentum and if we don't see any price picking up towards the time frame and into the time frame that we're trading towards the doldrum, then that may not be a good opportunity to remain in the trade, and trailing should be a little bit tighter. And those are actually my indicators. Okay, so moving on to the next question. What are the 2 most important criteria before taking a trade? So what do you look at before pushing that buy button or that sell button? And I'm gonna ask AJ first. What are those 2 most important things that you need to look for, whether for a long or short?
That's a great question. So I like to do a lot of my analysis outside of market hours. And I look at a lot of different things. I look for whatever technical signals are telling me that there's a trade to be had. Then I build confidence around those technical signals. And then the next day, I'll want to do some sort of quick test during the trading session to make sure that the symbol's going in the direction that I expected it to. Otherwise, I don't want to pursue that position. So if I had to narrow it down to 2, I would narrow it down during the part that's after hours, where I'm actually analyzing things. One of the things that I've really found useful, that's probably one of my favorite things to do, is compare volume on both sides of the equation, buying and selling volume of whatever underlying symbol I'm interested in, compared to the number of actual trades made for that symbol. And here's why. Because if you find that there's a lot of trades being made and a lot of volume, then the average number of trades or average number of shares traded per trade is kind of a small, indicating that perhaps this is like a lot of momentum, a lot of retail traders jumping in on an idea. If I see just a few trades and the average number of shares per trade is high, then I'm getting an idea that there's somebody with a big market moving type of wallet in his back pocket or her back pocket making some decisions. And I always like to compare at the end of the day what was going on with respect to number of shares being traded versus number of trades being made during that day. So I look at that very closely and I balance that out and see if there's some sort of manipulation. During the actual next trading day, I like to just do something very simple just to make sure that my symbols are going my direction by comparing is the price. And I always wait until the afternoon session myself to do any sort of trading. I'll even wait for professional hour if I'm expecting or seeing scheduled some sort of afternoon news, but usually I'm in the afternoon session and I'll say, is my price greater than today's open, yesterday's close, and even the high or low of the first 30-minute bar? I call that my open range. I just want to make sure I'm on the right side of the equation. Otherwise I can wait a day.
I love that, AJ. And in fact, I do look at that as well. So thanks so much for your input. Archana, what are the two most important criteria before executing a trade? So what do you have on your checklist? What does that stock or ETF need to do before you hit the buy button? The two most important things for you, the buy or sell button.
Like AJ, even I do my analysis, most of my analysis pre-market or after hours, and I have alerts set up, but I would have two lists. If I will always trade in the direction of the trend. So if the market is going higher, okay, I take out my shortlisted bullish trades. And if the market is bearish, I'll have, the stocks that have not been performing well. So I would short the ones that are not having strength versus go long with that. So with that, those two lists in my head every day in my paper always, I will next look at, of course, the volume and the volatility, because the volatility tells me whether I should sell premium and either sell lion condor or put spreads or whatever, or go directional, because I don't like to pay more than I am supposed to. So if it is, if the premiums are jacked up, I would rather go and do some kind of a selling strategy than just buy and,
Awesome. Awesome. I love your strategy. And Samantha, what are the two most important things that you look for before hitting that buy or sell button?
Well, my main focus is anticipating volatility. So that's kind of the backdrop. What's going to bring volatility into an asset and move it one way or the other? I'm obviously needing to anticipate volatility, and then I have a thesis on direction. So the things that I'm looking for, that's always the backdrop. And then of course the time, volatility, direction, and time. That's just the backdrop. As far as, I guess you call it like indicators or what have you, the two things before I actually place a trade is causation. I need a reason. So I'm always looking for causation and then confirmation. And one of the ways that I look for confirmation is I can track money flow. Sometimes it's in, big orders, if you will, in the quant world. Other times it's option flow. So since I'm an option trader, I want to see lots of potential, activity percolating and positioning into a name. And on a shorter duration, of course, it's, they're chasing. But in a swing trade, they're planting, a position further out in time. It kind of shows some seriousness of intent. So I like to use that as, one of the confirmation indicators, if you will, that gives me a higher confidence. But basically, it's a pattern that I'm expecting volatility to enter, direction, and it's in large part, I have a cause, and then I'm looking for confirmation.
Love it. So you want to have that catalyst on your side.
Yep.
Awesome.
Absolutely.
Perfect. Okay, Jim, what are your two most important, let's say, components before hitting that buy or sell button?
Sure. Well, the one would be right off the bat is the risk, obviously. And the way I try to look at that is again, what is the level of risk on the trade and how can I adjust the position if I had to? And also is the underlying maintaining above key levels or below key levels if I'm looking for it to go down. So where's the market on the underlying as far as is it above or below my key levels? And then, of course, adjusting the risk. Is it going to be an easy trade to adjust, and will it be a relatively lower risk? The second thing that I think is very important is I like to look at the market, have an opinion on it, and then I want to come up with a strategy where the potential, the universe of potential outcomes, most of them are very favorable to me. And that, to me, tells me that my probability of winning is quite high.
Awesome. Thank you so much, Jim. Well, I'm going to tell you what I do, guys. Basically, my two biggest components before I initiate a trade are, like Archana mentioned earlier, obviously the trend, because I'm a trend trader and I love to trade with the trend. That is where the institutional money is. That is where the money flow is. I'm going to use Samantha's what she mentioned here about the catalyst. I also look for the catalyst, the reason why it should move higher or lower. But if the catalyst lacks for that certain day, because not every day you have a catalyst in, in stocks or in futures indices, I always go with the trend. So I look for pullbacks and then I look for a setup. So number one is trend and number two is setup. Obviously, I'm looking for the ESTRP, that is the entry, the stop, the target, the risk that is associated with the trade, and also the position sizing. These are the most important aspects that I look at. So it's the trend and the setup. And I usually use very simple strategies for either for my day trading or for my swing trading. I look for pullback buys, pullback sells, breakout breakdowns, and then I have a few other strategies that I deploy, but they're like really specific to the time frame and to the strategy that I'm trading. All right, so we're gonna jump into the next question, and then we're gonna look at some charts. There are a lot of requests here in the room. So the next question is, what method do you use for trailing stops? AJ, I'm gonna start with you.
Well, first of all, I am a big fan of, since I'm doing a lot of option trading strategies, and a lot of my option trading strategies are all about premium decaying either through implied volatility drops or through theta decay. So I'm a big fan of conditional type when my broker platform allows me to do stops based on what the underlying is doing versus what my strategy is doing. So I always want to tell people to get familiar with your broker platform, talk to your broker, be friendly with your broker, and have them give you tutorials or even personal instruction on how to do conditional trading, because that's going to be really, really important. And then if I'm doing any sort of trend following trading, which I do every once in a while, especially when there is a trend, clear trend to follow, my favorite is the chandelier, where you take three average true ranges and you subtract them from your tracking, when you're tracking a high over the last month. So that's one of my favorite strategies for getting out of a trend following position.
Awesome. Thank you so much, AJ. Archana.
Yeah, I usually don't use trailing stops. I will also use an OCO order because I have always analyzed the trade beforehand, so I know my stop and my price target. Unless and until I'm just chasing something because I saw a lot of call volume coming in, and I'm getting in on a Thursday with a Friday option, that's the only time I would trail my stop with the options. I mean, trailing stop on an option, but most likely it's always going to be an OCO order.
Okay, awesome. Samantha?
It's funny, I do a little bit opposite of Archana, but in regards to my trailing stop, I come up with, first of all, entry price, stop loss, profit target. So ESP, entry stop profit.
Yes.
But the exit is the only thing that matters, right?
Totally.
If you enter a trade, it's really not important. What matters is your exit price. So for me, if I have, opposite to Archana, if I have a short duration trade on, I consider it a lotto. So I'm not even going to have a stop because the volatility is going to be too wild. I'm just going to have a small amount in it, and it either works or it doesn't. So it will literally be maybe a half size position, and I will place it, or it'll be a hedge, and that is it. If it works, wonderful, right? IV explosion. If it doesn't, it's a loss. But I'm not trading short duration options with stops. That's for swing trades. And again, it's based on the underlying. So I use, in my trade alerts, for example, it's based on the stock price entry, the stop, and the profit targets. Those are all the envelope, if you will. Mm-hmm. And if it hits the underlying, it closes the option.
Mm-hmm.
Awesome.
So it's not, I'm not doing a 50% of the option price, or, a trailing, I can add a trailing stop if it's profitable, then I can switch that to a trailing stop. But otherwise, if it's a short duration trade, I let it roll.
Mm-hmm.
Mm-hmm. Very interesting. Thank you so much, Samantha, for sharing that info with everybody here. Okay, Jim, I'm going to ask you the same question. What method do you use for trailing stops?
Yeah, well, in lieu of trailing stops, I would probably use the moving average that I'm using to stay with the trade on the underlying, or I would use a chart formation. Like if you had a low surrounded by higher lows, I might use that point that was created as my get out point. And then if it's in options and the decay starts hitting, I may make a decision to roll it up or out or whatever I have to do, or spread it or something, if I think that the time's starting to eat me a little bit, but I still believe in the trade. So those would be 3 ways I would be managing the position.
Awesome. Thank you so much, Jim. And because I don't do any, I'm sorry, did you want to add something else?
No.
Okay. All right. So first of all, I use, just like Jim said, probably old school. I'm using moving averages, particularly the 20 simple moving averages. I'm day trading on the time frame that I'm trading. So I think it's very important to, once you have a trade and once you initiate a trade on a specific time frame, let's say on the 15-minute, if you're a day trader, you trade off of that 15 minutes. So you don't take the trade on the 15-minute and then you start trailing it on the 2-minute or the 1-minute. So if you're taking a trade on the 15-minute, you have to stay on that time frame for at least when you're getting to target 1. And once you get to target 1, that gives you a little bit of liberty. And what I typically do, I sell half of my position at target 1, and then I lift my stop to break even, or an area that is close as possible to break even, but it represents a support zone. And that needs to be, let's say, ideally under a 20 simple moving average. If I want to trail it more aggressively, I go to a smaller time frame. And if I'm heading towards, and this is an example for day trades in this, if I'm heading, let's say into target 2 or target 3, I always go, I want to choke the trade out. I want to be out of the trade because my window is very narrow for day trading. It's only about 2.5 hours a day. So I even go on a 2-minute. If I have the price exploding in my favor, then I want to choke it up on the 2-minute. And I use the same strategy. I use pivots and I trail it off of the 2-minute. And it can be applied on into swing trading, depending on the time frame that you initiate the trade. If you're taking the trade on the daily, obviously you wait for the trigger on the daily. You establish the support under the daily pivot low. Once you're getting into target 1, same strategy. So you lift your stop up, you take half of the position off. This is what I do. And then lift the second half of the trade into the break-even territory. And then I flip to a closer time frame to start watching it closely. And especially in a day like tomorrow, where we're heading into quadruple witching option expiration, there's going to be a lot of chop in the market. So you want to make sure that if you get into a day trade, you chunk in some profit at any point. Because obviously the unexpected is out there going into tomorrow. So tomorrow is going to be the big surprise for everyone.
You
All right,
are so exciting with your day trades. My God, I can't even hold on. I feel like you're going Mach 3 with your hair on fire. I love it. I love it, but it's not for me.
I know, and you know what? It's not for everyone. I have it in my blood. I love it. And here's the thing: I'm coming from the institutional side of investing, and I come from the investing side, and then I took it a little closer into the swing trading side, into the hedge fund kind of things. And then once I quit my job and I decided that I'm going to be a full-time trader, I went full throttle day trading, and a lot of traders don't know, because they always heard me about trading futures. For 15 years, close to 15 to 16 years, I was actively day trading stocks all day long. So yes, I have it in me. I love it. I love the adrenaline. I love the instant gratification. I look for, just like Samantha, I look for that volatility impulse at the beginning of the trading session. I am so focused on what I'm trading. And if I have a little catalyst, I love it. But
more power to you, girl.
But it's interesting how they can also dovetail. So for example, I much prefer the swing trading time frame, but I'm in front of this computer all day long. And of course, day trading is part and parcel of, having a trading room. And mother's milk, that's how I, started. But I see, for example, Archana's very focused on the chase, right? And I'm much more focused on inflection points for sector rotation and swing trading. But the two can live very happily. I actually love when I call it sharks. So the sharks smell the blood first. They're the day traders.
Yes.
They are there first. I swear to God, you can see it and you know exactly what I'm talking about. And then the swing traders are the ones who, they need a little bit more confirmation. They need to see what's going to happen. Is it going to be fake or not? Not really trusting. So then the active swing traders come in and they want to play that, for a little bit more time, long after the chase traders have left the building. And then the institutions, they say, you know what?
There's something here.
There's something here. This is more than just, a one-day wonder or a one-week revival. There's actually some value here. And then the institutions come in and they put in the floor. So I like to track all three.
Yep.
Obviously, yes, absolutely. Absolutely.
Cool.
So day traders are the ones that are literally getting that catch.
They smell the blood.
Exactly. And we go after it. And then we take it, let's say, up or down to a level where if it's getting picked up, we are having continuation. If it's getting picked up by hedge funds, we're getting continuation. If it's getting picked up, and oftentimes a lot of day traders are holding positions because let's face it, if you have, I don't know, if you're trading XYZ and if it's, in a massive trend, you're getting a lot of influx. Volume into the market. Obviously, if you're trading right into the highs, right, you may want to hold that position for the next day. So yeah, I totally agree. And, just a quick disclaimer right here. I love day trading, but I love swing trading. Okay, more. So, day trading, I like it because I only do it a couple hours a day and I'm done. But swing trading is something that is, I don't consider it a job. It's more like a hobby. I always look at stocks, and that's because I come from stock trading background and I come from the investing side. I switched to the swing trading side, and this has always been with me. So I love it. I love the flexibility. And plus, to be a day trader, you have to be like really good at what you're doing because it's so precise. It's almost nanosecond precision, where swing trading gives you, more flexibility. You have a little bit more time for analysis. You have a little bit more time to see, hey, is it testing that level? Is it going back and forth? What is it doing at that level? So you have a little bit more flexibility when it comes to swing trading compared to day trading. In day trading, you see it, you get it, you're in, you're out. But in swing trading, and that's one of the reasons why a lot of swing traders don't have so many stop outs as day traders, because you're dealing with much heftier support resistance levels, with much heftier confluence levels than any day trader. So if you're trading, I don't know, a 5-minute chart, or there are traders that, bless their hearts, they trade the tick chart, you can't compare a support level or a confluence level off of that little tiny a segment in the market with a 1 hour, 4 hour, or even a weekly. So I think that, and if you're asking me that instant gratification comes from day trading, but you have to be extremely accurate. But if you're looking for a long-term, let's say, career, or if you're looking for a long-term, stress-free kind of style of trading, this is the a wealth generator. This is what's going to create you. This is what's going to take your portfolio to the next step. And you guys can confirm or negate what I'm saying, but I think the money is on the longer term side of the trades. And you have to be really, really good to do the day trading. And day trading is only as an income producing style of trading, at least for myself.
I would agree. All the gains of the SPX has been with gap ups, right? So
Yep.
if you don't hold overnight, you don't make money actually.
Mm-hmm.
Totally. Absolutely.
Exactly.
All right. Before we wrap things up here, we had a few questions, and they were stock related, and they want, we have members in this room that are asking about the direction of the SPYs. So AJ, I don't know if you guys have charts in front of you.
I do.
Awesome. Okay. So I forget the name in here who was asking about the SPY MU, and there was another stock, but we're going to get to it. So what is your take on the SPYs? What do you think, what do you think the next move for the SPY is going to be?
We're in consolidation. So we're in this phase where you're seeing a little bit more option activity while the underlying indice and the representative ETF are stalled and the volume is going down. In other words, we're seeing some price action, but it's a few voices speaking loudly. So what does that usually mean? It usually means that there's a lot of uncertainty. There's a lot of hedging that's taking place so that people can protect themselves, and any sort of catalyst will take you one way or another. So, what we can do is either an active type of breakout strategy, or if we want to analyze our various option trading strategies, if we can get into some sort of passive strategy that profits to the top or the bottom and for some sort of breakout, that's kind of where I would go with this one.
Okay, awesome. Thank you so much. Archana.
Yeah.
What's your take on the SPY?
As of now, it's right in the middle of that gap that it did after the Fed.
Mm-hmm.
Also, I'm like, the way I think of it is that is going to be the target. And I always think of stocks as running a race or climbing a mountain or descending. So if I'm so close to getting to that gap, if I'm a runner, how much ever gas it may be, I may be tired, I'll still try and get to that finish line. So I am trying to think that it'll try to at least go to that gap.
Right.
Of the Fed day. So after that, let's see what it does. Does it break it above or go back down?
Awesome. Samantha, what is your take on the SPY? What do you think the SPY is going to do next?
What's your time frame?
Yeah.
Okay, I'm actually looking at the 1 hour and the daily.
All right, so I look at the 1 hour, the daily, and the weekly, and I basically do this thing where I'm looking at big order flow coming in to try and anticipate when they're going to, pull the rug.
Mm-hmm.
So right now I am definitely anticipating that into quarter end for a few reasons. Both my intermarket analysis tells me, could be 2 weeks. We might get another fast gyration like we did last Thursday. But ultimately, this pension rebalancing that was put on pause in March when we had that 35% drawdown is now going forward into 6/30, and they got $76 billion worth of equities to sell into June quarter end. So can't help but wonder how that's going to affect, right, the market. The June OPEX, options expiration, that quad witching that is tomorrow, is always this really lovely kind of coiling effort, that auction between call buyers, put buyers, and all that loveliness, and then they expire, and so it's free to move. So we will have some movement, and I think it will be nice and wide, and it will be a day trader's dream. It'll be heck for trend traders in the next 2 weeks. And I think you can be bullish, but with every trade, expect to be wrong, because at some point in the next 2 weeks, we're going to have another very large volatility event. That's my bet.
I agree, Samantha. I'm with you 100% on this. Jim, thank you.
Well,
Jim,
Yeah, I'm not so much on the crystal ball, so I'm just going to let the market kind of dictate my feelings. I have a little bit of a prejudice because some of the quant guys have been saying that we could see new highs in the market in July. So I'm a little bit paranoid to not have enough money out there if it starts going, because they say the active managers are underinvested. And obviously, we just have 1.5 million unemployment and we still don't budge.
Mhm.
And this economy is absolutely terrible. You can't kill these companies. They're so strong. So, while the valuation guys are 10% long stocks and watching the thing go, I'm more concerned that these quant guys are going to be correct. So if we start getting above 3130, I'm going to start increasing my exposure. If we get above 3150, I'm going to really expand it, and I'm going to be looking for that 3300 to get filled. So I'm going to be going with the flow, and I'm prejudiced to the quant guys because they've been so accurate, and it's been so contrary to your stomach that it's probably right. And so basically, I'm not surprised to see 3,300 in July or a new high, because that's what these guys have been saying, and they've been very accurate. And again, 18% of the people believe there's a V-shaped recovery. There's 5 trillion in money market. There's 2 trillion in private equity. There's more money people sitting at home than they would have working. We took a 10% hit on income during this crash, and they clearly made up that income very easily with these PPP programs, et cetera. So, but I can definitely listen. I'm not silly here. If we start breaking under 3075, it's going to open the door. But I was a real believer on 2975 because it was the double top from 2017, 2018. And so when it came down to 27,975, I was a huge buyer at that point. And I'm a believer that that's going to be the low, kind of like 2200 was the low, which also was the high points from Obama. So it didn't stop at 2200 for no reason, and it didn't stop at 2975 for no reason. As long as these kind of levels hold, I'm going to still be more prejudiced that there's an upside move coming. So again, but right now, like you guys are saying, very true, we are stuck in the middle, but that's not going to last. And when it does start going, I can hear in the back of my ear, new highs by July, and I'm not going to be underinvested if that starts happening.
So that means
All right.
everybody,
Yeah, I
no
like your take.
range-bound option trading strategies, okay?
AJ, can you repeat that if you don't mind?
Yeah, I was just going to, for the folks that are listening in, we've all pretty much agreed that in the medium, even short duration, you're not going to be wanting to get any option strategies on this SPY that's range bound, right? Because it's going to go up or down. We're pretty sure that it's not going to be staying where it is. It's not going to be.
And you could take a look at some of the bigger stocks that have been leading this thing, and if you think they're going to continue to lead things like the FANGs, you could consider a sell out of the money put, buy a call, and see if you're right. If it goes through the roof, as long as you're willing to buy the stock, if you get put it.
Yeah, if you've got the money, good.
But yeah, I think that's a strategy that might make sense. Something that I talked about with Apple earlier today.
Right. Okay, so I'm going to take it one step at a time. Tomorrow, quadruple witching option expiration. So as we know, always as we're heading into the quad day, things get a little bit more choppy. This is nothing out of the ordinary. The price action that we're witnessing today, that we had yesterday and that we had the day before, was totally expected. We all know that as we're heading into quadruple witching expiration, things are getting choppier, premiums are getting killed. And specialists love to pin these indices at specific numbers. It's indices and also ETFs. So for NASDAQ, it is so obvious that they have been pinpointing it. They have given us some clues because it is running into 10,000. It's coiling around that 10,000. Yesterday we had the 10,030. Today we made a low at 99.40. So it's moving into a 100-point range, about 100-point range. And then that 10,000 is somewhere there in the middle. The S&P is obvious. They want to pin it at 3,100. The SPYs, they may want to, because we're talking about the S&P, the SPYs, they may want to see it about, I wouldn't be surprised, 310, to pin it at 310, or I don't know, maybe 320. They love these whole numbers. So that's simple thing right there. And also in the Dow.
Anka, could I ask you a quick question? Do you have any kind of statistics on what the open interest is on each strike price?
No, I don't.
Because that might be helpful to find out where they might want to push it, knowing that the activity is at a certain strike price, you know?
Right, I don't. I don't know, Samantha, do you have anything?
Say that again, please. Sorry.
Do you have any, you can say.
Yeah. Sorry, Jim, go ahead.
Do you have any statistical information on what the open interest is at certain strike prices for expiration?
Oh, yeah.
And obviously it might be helpful if you wanted to take a shot that they may want to rest it near those strike prices so both sides can go home with the money.
Yeah, it is wicked tight. So 3,100, let me see if I can run it up again. So 2.8 trillion of options expire on Friday, third largest non-December expiration, 230 billion of SPY options, and another 250 billion of E-mini futures. Let's see. That quant number, hold on. Very, very tight, literally.
Yeah.
118 is the top, 3,100 is the low.
Wow. So yeah, so we have resistance in mini S&P at 3120.
Right.
And that's from today. This is incredible. Yeah, so they may want to pin it at 3,100. And I think the Dow, they may want to pin it at 26,000. And I think that they don't care about Russell. And that's my take. I think is like way too thin for them. So the other thing that, where I'm seeing the SPYs, because I'm on 100% technical trader, I think that if SPYs tomorrow is going to try to break above 312.40 or 50, so that's a really thin layer right there between 40 and 50, and that's 312.30 or 0.50. That is going to send the price back up into the 313, 314, 315, and that is for tomorrow, if not maybe even higher. If it's going to break 309, which is today's low, pre-market low was actually 308.8. So if it breaks below that zone, I think they may want to they may want to accelerate it lower at least into the next support, which is the 306, 305. So it's trading in a very, very tight range. So because we are having this range, we could definitely think about the green side of the tape as a breakout. I'm looking at the 1 hour. I'm looking at the daily. Obviously, if you're looking at the daily, obviously, if you're getting a daily rotation over today's high, we may have a rally going into tomorrow. And I have to agree with Jim here. So therefore, my bias is for higher tomorrow, contingent on the price breaking above that 312 point, let's say 0.40, 0.50 area. And I have to agree with Jim when it comes to going into 4th of July and going into the next quarter. Have you guys noticed it's almost unpatriotic to short stocks going into a holiday?
Yankee Doodle Dandy, huh?
I am telling you guys, there is something about holiday trading that is just pushing the market higher, even if you have a downtrend or even if you have a chop market right before the holiday. There's always, and it's that thin volume that is pushing the market a little bit higher, going into 4th of July, going into Memorial Day, going into Easter, and it goes on and on and on and on. Plus, there's another thing that I have, as a top watch going into next week, and that is window dressing. At the end of the quarter, window dressing becomes very interesting, and especially these COVID stocks, like Apple and AMD, Nvidia, Microsoft today, incredible strength, and these are going to be my top watches for next week, and that's because I'm coming from that institutional hedge fund side. I would love to see some runner-ups next week into those specific names. So I know there were some, even MU, so I know it was mentioned here in the room. So yeah, some of these tech stocks are definitely going to be on watch. And it's also very interesting to see going into next week as we're getting closer to the end of the quarter, how financials are going to react. Because if we're getting strong financials, I guess the market is going to start rallying higher. And like Jim mentioned, weeklies are very important. Those weekly activity, the weekly activity into our charts. So if we, let's say, don't manage to close tomorrow above 316.25, but if we going into next week, so going into next Monday, if we trade above that 316.25, it's almost like I'm 90% certain that the market will continue higher back into that 323, and we're going to get to that 330 level that Jim mentioned. And that may possibly bring some more institutional money into the market.
The underinvested, they're going to have to throw the towel in some point in time. And, at the end of the quarter, they don't want to go back and show their statements with lack of exposure.
Absolutely. Absolutely. They don't want to show exactly. They want to window dress their portfolio. They don't want to show that they have been in, I don't know what has been lagging this month or this quarter.
Money market's paying 0.5%. I'm sure they pay him $500,000 a year so they can put him in money market, right?
Of course. Absolutely. Absolutely. All right. So very quickly right now, let's do a quick wrap up. AJ, where can traders find you? And if you have a special offer for us today?
Absolutely. So people can check me out at my main website. It's TimingResearch.com, TimingResearch.com. And we do have a special. If you go to optioninvesting.org/special, you'll see our special of the day that I spoke about earlier this morning. Definitely check out the archives for all of our speakers today, but check mine out too. I did a good presentation at 9 a.m. Eastern time.
Awesome. Thank you so much, AJ. Yes. Okay. Archana and Samantha, tell us where traders can find you. And if you have a special offer, I know that you guys had a special offer for today's presentation.
This is true. So yes, LaducTrading.com, LADUC trading.com is my website. And there is, it'll pop right up as far as what's offered in my trading room, 9 to 12 brokerage triggered trade alerts, daily posts of the action, as well as my macro to micro analysis. Archana runs an afternoon session on management and option tactics. I have 2 trading room moderators, so we get lots of support and lots of action across multiple time frames, multiple books. And the promotion is a URL that's somewhere in here. Hopefully it's working. I just got a little feedback that it wasn't, but it's $100 off the first month, and all of that is included for $350, normally $250 for your first month.
Awesome. Thank you so much, Samantha. Jim, where can traders find you?
Go to optionprofessor.com, but you can also just go to optionprofessor@gmail, and basically put your email address in there. And then each week I give a weekly update covering everything from the stock market to bonds, international and the dollar, crude oil, as well as the gold, silver, and copper. And so I do an analysis and I give you ideas. Recently, we did talk about the 29.75 being a very important spot to hold and a good place to look as an entry, and that worked out real well. And then in February, we were real believers 3,400 was the top, and 2,200 we were real believers of a snapback rally. So I think we've provided some good opinions and observations, and optionprofessor@gmail will allow you to get in the queue and receive it free of charge each and every week.
Thank you so much. And Jim, I recall we were on one of David's shows. I think it was a couple of years ago, and you were mentioning that a big move was coming up in gold.
Mm-hmm.
And
yeah, as soon as it broke 1350, it was all
exactly.
It was all clear.
Exactly.
Yeah.
Yes. Exactly. So thanks so much for that. If you guys are interested in day trading futures or swing trading stocks, you could reach us at tradeoutloud.com. You could go to our website and learn more about what we do and what we are and what we offer. And if you have any questions, you can feel free to email us at info@tradeoutloud.com. And in fact, next week, we're going to have a free webinar on Tuesday. And we're going to talk a lot about futures day trading, the power 2 hours. It's not the power hour, it's the power 2 hour power. Okay, so thanks so much, everyone. Thank you, David. Thank you to our special guests, to AJ, Archana, Samantha, and Jim. Thank you for all the presenters today. And of course, thank you so much to our audience. Thank you for your questions. Thank you for your patience and your trust in us. This wraps up today's event. I hope you found it useful. Don't forget that all the recordings will be available on the Timing Research website. David is working very hard on putting every recording together. And the recordings are also going to be available via podcast and other channels and avenues, so for easy access. So thanks so much again, everyone. I hope you all end the week into the green. Remember, tomorrow's quadruple witching option expiration. Expect a lot of chop. Expect a lot of nonsense going on into the market. But the trend is your friend, so stick onto the right side of the trade by respecting the trend. So thanks so much, everyone. Have a great night and a great weekend off. Bye.
Thanks, Anka.
Thank you so much.
Thank you.
Bye.
Thank you.
Bye.
Thanks, everyone.
Thanks, David.